Good evening. We are following breaking news that gold has officially broken a new all-time record amid the ongoing Greenland tariff threats. We are watching this closely. In economic news today, gold has surged above $4,800 per ounce, reaching new highs. And as fears continue to mount, we're seeing clear safe haven demand. Investors are rapidly shifting away from traditional risk assets and moving that capital into gold. Despite the instability, the markets are continuing their upward trajectory, largely driven by the geopolitical events we're tracking closely. The White House's latest tariff threats against Europe are directly tied to Greenland. We have the detail on what this means for transatlantic trade moving forward. We begin tonight with the renewed concerns of a global trade war. As you can see, the impact on key shipping routes and the introduction of new tariffs is significant. In financial news, gold has broken multiple records in recent days, reaching new milestone price markers. The biggest debate on Wall Street right now is just how much higher these prices can actually climb. Are we looking at a bubble or a new paradigm? Welcome back to the Market Report. Gold has officially reached a new historic high in 2025, capping off an unprecedented 5-year run. Let's look at the charts. The momentum is strong. Gold entered 2026 showing a smooth continuation on the charts, indicating significant investor confidence. As you can see behind me, real interest rates have been trending lower across the board. This decline has significant implications for investors looking for yield. Central banks are actively diversifying their portfolios away from the dollar. As this chart shows, we've seen a steady decline in USD dominance over the last decade. As we face increasing market volatility, gold continues to prove its role as the world's ultimate safe haven asset. Welcome back to the Market Report. Our top story today, the results of the annual LBMA survey are in, showing key trends in the precious metals market. Analysts are now projecting a significant rally, expecting gold to climb above the $5,000 mark. As you can see by the data behind me, the consensus expectation for U.S. real rates is beginning to decline following the Fed's recent dovish signals. With the Federal Reserve continuing its easing measures, the focus now shifts to the long-term impact on inflation and market stability.
We are witnessing a sustained move away from the dollar. Diversification is the key word here, with major shifts toward
The LBMA is calling gold the headline story this week. The metal continues to show strength amidst market volatility. Goldman Sachs is doubling down on their bullish stance regarding the tech sector, citing strong Q3 earnings and robust market indicators. Goldman Sachs has reiterated its highest conviction trade, pointing to sustained growth indicators. This move signals strong. Goldman Sachs analysts are maintaining their $4,900 year-end base case for the S&P 500, citing strong earnings expectations and a resilient economy. Central bank purchases surged in 2023, accumulating significant reserves. And as we look at the 2024 forecast, that trend is expected to accelerate even further.
Private sector demand truly accelerated the rally throughout 2025, demonstrating a robust economic expansion that caught many off guard.
If we look at this chart, the surge in ETF inflows provides compelling evidence that investor demand is not slowing down anytime soon.
We are seeing unprecedented demand from institutional investors, specifically asset managers, large hedge funds, and...
So who is driving the current demand? Well, the data clearly shows that institutional investment is stabilizing the market. While we begin tonight with the critical developments across Eastern Europe and the Middle East. These flashpoints represent the defining backdrop for global stability. Welcome back to Metal Strategy. Joining us now is Nikki Shields from MKS PAMP to discuss the latest trends in the market. This is not a speculative peak. What we are seeing is a healthy market cycle, supported by robust economic indicators and steady growth. So let's dive into Shields' projection. The $5,400 forecast represents a clear moderate upside. Referencing last year's performance, silver experienced a near doubling, showcasing remarkable growth in the commodities market. As you can see on the screen, the 60% gain in gold really overshadows traditional investments this year. We break down the numbers after the break. It's crucial to understand the distinction. What we're witnessing is a secular trade driven by underlying fundamentals, far from the irrational exuberance of a blow-off top. We start with the ongoing crisis in Venezuela and its impact on global markets. Then we turn our attention to the Arctic, where securing a stable supply of critical commodities is becoming a defining challenge of this decade. Demand is simply outpacing current production. When looking at the upcoming quarter, investors should focus on 3 key indicators: inflation rates, consumer spending, and global supply chain stability. Gold's record surge is driven by both bullish forecasts and ongoing geopolitical concerns. Thanks for joining us on the Finance Desk USA.